ladies and gentlemen. I'll get on with the presentation. The first couple of slides here are statutory disclaimer. And at this point, I'd just ask if anyone would like a copy of this, please put your hand up. We've got 20-odd copies, which my colleague will hand around. So he'll do that as I'm talking. And we have a stand, obviously, and copies of this presentation are available on the stand. Right, the company overview. We're developing La India Gold Project in Nicaragua into production. We've got a total of 2.4 million ounces, so that magical number of 2 million, which the previous speaker discussed, and having drilled out and independently verified we have. And half of that, we have a reserve within that of 675,000 ounces at 3 grams, and half of our resource is in the higher level of confidence, the indicated, and half is an inferred. We've got the key permit. Last August, we announced that we got the master permit to construct and operate the mine, and that's to produce about 100,000 ounces of gold. We continue with a strategy of proving a major gold district of 5 million ounces. Nicaragua is mining friendly in that it's the third biggest export for the country. We're also now Toronto listed and got a strong management team. So strategy, we have the twin strategy of taking the project through to production and producing 100,000 ounces of gold, and then materially expanding that production, and secondly, of proving a 5 million ounce gold district. In terms of the investment case, we're quite undervalued compared with our peer group in Canada, which is why we got a dual listing last January. We've got some serious backing by the World Bank IFC. Jim Mellon is 10% shareholder in the company. Ross Beatty is another well-known Canadian mining entrepreneur. In terms of MPVs, we've got an MPV of about $190 million US versus the market cap of 20 million US. So price to book is about 0.11. We're $8 an ounce of gold in the ground. That's taking the market cap of 20 million divided by the 2.4 million ounces of gold. And so that's really a fraction of today's gold price, less than 1%, as you can see, about 0.75%. We've got lower quartile all-in sustaining cash costs. That's our break-even price of production of $700 an ounce. So there's a $600 margin per ounce of gold compared with where we are today's gold price. We've got reserves. We're looking to permit additional feeder pits to increase the reserve case, which is 80,000 a year, to 120,000. So we've had site visits, and we're advanced in that, permitting additional high-grade feeder pits. And we're looking at getting some cash flow early by taking some ore from the permitted pit, which is 600,000 ounces, and then taking that to nearby mines to toll refine it through those mines. So that means we don't have to have capex ourselves. We do contract miners, contract explosive, contract truckers. And so we're trying to negotiate that with nearby mines at the moment. So that's just a map of Nicaragua. B2Gold is the big gold producer there. They produced about 140,000 ounces of gold last year. There are 6 Canadian companies operating there. The project, this represents about less than 10% of the project area, but the resources of 2.4 million is spread over six small resource areas. And the core area, I can just walk over here, the core area is La India here. This is the part that we're of 1.3 million ounces of gold. This is all quite close together. It's 1.5 kilometers between these 3 vein sets. And so you have 2.1 million ounces of gold there. We're only permitted at the moment to do an open pit out of the top 900,000 ounces there. There's 400,000 ounces of gold beneath it. All these areas can be expanded by drilling along the vein system or going a bit deeper. That's just capital constraint, but that's why we're quite confident we're on a much bigger gold district. That's La India vein. So you're looking there from left to right, you're looking at 1.3 million ounces. That's about 1.2, 1.4 kilometers. So you've got, roughly speaking, we've got about 1.3 billion sterling worth of gold in the ground there, looking at that. At the top, 900,000 600,000 ounces is the open pit, and beneath it we've got the underground. So that's just what it looks like. That's a picture taken. That's a vein system dipping towards you, or bending towards you. We've got this permit. I just spent 30 seconds on it. This took 2.5 years to get. Very important to get the social license to operate. There's communities nearby. We've had applications for 600 jobs in this process. The community's all wanting the mine. It's an old mining town, and they're pro this project going ahead. Now that's the plant layout. It's just in Spanish, but Tahoe is the main pit. Then the processing plant is La Planta up to the north right, and that's 1.2 kilometers away from the community. Then we've got tailage storage facilities and so forth. That just shows the layout. The second, I mentioned we can expand it, and those 3 core areas. The 3 core areas, you can see here how we can add almost 1 million ounces by drilling down dip and along strike of those areas. And La India one we just showed you, we think we can add 300,000 ounces to 1.6 million, and the other 2 to the north can go up. So that's drill ready. We've got the plans for that. It's about 20,000 meters of drilling, relatively low risk. We've got the piercement points on the models, and we can expand the resource quite quickly. In terms of proving the district, this is a classic for anybody laying the ground. It's very much a multidisciplined approach. We were granted in December an additional concession, which is down to the south there, the one that's not coloured in. So this area, this concession area we have for 25 years, and it's the strike extent of these gold veins into the south. So the government gave us that permit for 25 years in December last year, and it increased the land package by 45%. And importantly, we've done soil geochemistry over 300 square kilometers. We've done helicopter-borne geophysics. We've done detailed structural modeling. We've done trenching. So there's 106 kilometers of veins on the surface here. So it's we're very confident it's a very big district. This is the share capital structure. And you can see the share price chart. Just looking at the chart, why is our share price down? We're down at about 20p pence at the moment, and that's halved in the last year. One of the reasons for that is the politics in Nicaragua. Between April and July last year, there were 320 people killed, including 22 policemen, according to the United Nations. So they had the best way of putting it is just a period of violence and turmoil. They increased taxes, and the government made a mistake. There was then a movement to get rid of the current presidency, which resulted in more deaths. But since July through to today, there's been no deaths. So there's been demonstrations have been banned, or the right of assembly's been banned. But it's calm. So you can move about on the ground. I've been back since that problem broke out about 9 times. I go there roughly 1 week every month to Nicaragua. So you can operate, you can move around, and the demonstrations are in the capital, not 2.5-hour drive away up where the mine is. So that's linked in. So the perception of political risk has seen a halving of the share price. But actually on the ground, it's gone really well. We've got the permits, we've got new concessions, we're expanding it 50% to 120,000 ounces of gold a year. The shareholders on the top right, you'll see Mr. Mellon's our largest shareholder at 10%. Ross Beattie, who's another billionaire, has got 7%. I'm still hanging on to a few shares, and those are the top shareholders. So what's next for the project? If I just wrap up on this slide, we've got the permits last year. We need to complete additional studies to get everything, if you like, shovel-ready, as it's called in the business. So the final engineering designs for the plant infrastructure, and to get everything done for that. And the construction, that's going to be another 12 months of that. But in parallel with that, we're resizing the plant to make it 50% bigger, to be this 120,000 ounce producer from day one. Subject to cash, we'd like to add another 1 million ounces, and I've shown you where we can get that from. We've got the drill plans, and that's a realistic target. And then we can continue to go for the district split play. And I just add on top of that, my main priority short term is to try and get some early cash flow by taking gold from the permitted pit to nearby processing plants and toll refining our ore through their plants. And that concludes my presentation.
Steve, we want to have some questions.
Sorry, I can take questions if there's time.
Does anyone have any questions, please, for Mark? There's one.
You didn't mention silver, but I noticed on one of your slides there was silver values given as well as gold.
Yes, thank you for the question. There's about 1.5 grams of silver for every gram of gold. The price of silver, the gold to silver ratio is about 75, 80 to 1. So it's a very small proportion of silver for us. It would increase the asset by 1 or 2%. There's just a microphone coming. You just put your hand up so they can see you. Thank you.
You mentioned a couple of times priority being early cash flow. Can you
Yeah.
put that statement in the context of current balance sheet and future funding requirements?
Yes. The company raised 1.75 million sterling earlier this year at 24 pence. That's compared with the current share price of 20 pence. So we're funded through for this year. We're not funded through for the construction phase, which we imagine will be funded debt to equity, but there are various funding options with gold loans and so forth. But we're funded through for the balance of this year. I think, any other questions on that? Okay, if not, thanks very much. We're at the booth. Please feel free to ask any questions there.